this edition of How We Invest Your Money, I'm speaking with Paul Taylor, who heads up Fidelity's Australian Equities Fund. Paul, thanks for your time today.
Welcome.
So you've been with Fidelity now for 22 years and heading up the Australian Equities Fund for 16 years.
That's correct, yeah.
Are there any sort of correlations between now and what you might have seen in the past, and how are markets responding?
It is. It's a really interesting point. I always think Mark Twain has got a great quote, which is history never repeats itself, but it rhymes. And I think that's a good way to look at it. It is an interesting time because we are at very low interest rates. Interest rates have been go on very long cycles. So 1946 to 81, interest rates went up. 81 to 2016, they went down. Central banks tried to normalise interest rates, couldn't, and have brought them down again. Now, this is a bit of an unusual time in that people are looking at it and thinking, well, normally there's such a low rate that would be temporary, they'd be looking for a cyclical rebound. But I think now people are starting to think, well, actually we're caught in this environment, and growth and rates are going to stay low for a little while, or maybe a prolonged period. And I think the interesting thing in the market at the moment is we've got this tug of war between a couple of different factors. We've got this tug of war in that no earnings growth, very low economic growth, very low earnings growth, which obviously dampens valuations and stock prices. But we've got very low interest rates, low inflation, low cost of capital, which really boosts valuations. And it's the low cost of capital that's winning at the moment. So that's actually winning the tug of war, while we're seeing the market actually go up quite strongly in what feels like a really negative environment. So yes, you need to keep it in historical context, but it is actually a bit of an unusual time.
And looking at it sort of in the shorter term, just recently we've seen the earnings season for fiscal 2019. What's your overall assessment of that?
So look, the earnings season, it's probably a few more disappointments than positives. And that goes with this sort of, I guess, more subdued environment. As I said, sort of the economic growth is very subdued, down around that 2% or even lower. Earnings growth are following that much lower rate. So we're getting very low, sort of 0 to low single digit earnings growth. Resources have been doing a little bit better. So resources have been the brightest spot, although going forward is a different question. But pretty much most of the other sectors are very low single-digit growth. We've got a few bright spots in terms of technology and healthcare, which have been, I guess, a couple of sort of standout sectors. But net, subdued growth and maybe a little bit dour is probably the best way to think about the reporting season.
Sort of following on from that, I mean, everyone watches the earnings periods for Qs on the market, but what are some of the other things that you factor in at Fidelity in how you construct your portfolio? And can you talk us through sort of the size of the team and how you actually go about as a global business and putting together your Australian equities portfolio?
Yeah, definitely. So Fidelity is a bottom-up stock selection firm, which means we go out and talk to the companies, talk to the management team. We go and see their businesses. We kick the tires. We talk to not only the company, but their competitors, suppliers, distributors, customers, to really get a 360-degree view of that company, which to me is a really strong process that tries to eliminate the noise from the market and really capture turning points in the market, and also really look at sort of the long-term prospects for that company from a bottom-up perspective. So now we're doing that for all the companies in Australia, but we're also doing it for, as I said, those companies, competitors, suppliers, distributors. And often those companies might be overseas. So actually having the global Fidelity network is a big part of, joining that with a really strong and large Australian team it's a very powerful combination. Even very domestic companies like Woolworths and Coles, their key competitors are companies like Aldi, which is German, and Costco, which is American. So understanding their strategies in Australia is an important part of, once again, trying to value Woolworths and Coles and trying to model those companies as well.
At the moment, we've seen some record levels of investor money going into passive funds. Do you think in the current the market downturn, will we see the importance of active managers coming to the fore once again?
Well, look, I certainly hope so. And you're right, the trend has been towards the passive funds. But I guess the bottom line is the passive strategy is a free rider strategy. And it's really reliant on active managers making active equity decisions. And I guess the other way I look at it is investing in a passive fund, what you're fundamentally accepting underperform. You have to, by definition, underperform because you're going to get the market minus whatever the fees are of the passive manager. So you're sort of guaranteeing underperformance. And I guess my view is that through time, active managers, good active managers, will deliver returns above the market and including fees. So that doesn't always out over 3 months, 6 months, or 12 months, but over the long term, I think it does out. And as you said, when you do get turning points, you do get difference in markets. When you actually need someone making an active decision and looking at the situation, studying that situation, that's really when the active manager, well, good active managers will earn their money. And I think it will be.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.